I end up in a lot of meetings with people that want to invest in real estate, whether they want to invest with us or not. And the first thing I always tell them to focus on is the principal and who's the firm you're working with. Like, do they have a track record? Will they tell you their lending relationships? Can you call and check on them? And making sure that you're investing with somebody that you, number one, trust, and number two, does what they say they're going to do. And so at the end of the day, as you know, like, you're putting your name out there to raise money, to build this project, stabilize it, and do all those things. And if somebody's going to invest in your project, like, they have to believe in who you are and what you're doing.
All right, well, Jarod, thanks for coming on the show today. Really happy to have you.
Thanks for having me.
Our first section is called Hot Take. I'll be asking you some questions about the current real estate market and what's going on with the economy and things like that. So we can just go ahead and just dive in.
Sure.
So I guess what's one belief or trend that you think is overrated or doesn't work anymore in multifamily development?
What I would say to that question is, really, I think you have to continue to evolve what you're building and where you're building it. And I think one trend that I would say is ending is thinking that you can just keep doing the same thing over and over. We saw after the pandemic, there was demand for different sizes of units changed. Right now, the trend seems to be really just a race to the best amenities, because that seems to be what people care about. And I think you just have to continue to adapt to the climate and the environment of what's going on at that time. And so just staying active and keeping your ear to the rail of what you need to have a successful project, I think is probably the most important thing.
For sure. And I guess going off of that, we're in June of 2025 now. A lot of interesting things are happening with the market and presidents like that. We're hearing a lot of stuff about tariffs, the supply drop off coming in the coming years. What's your prediction for how multifamily development is going to shake out over these next couple of years?
Yeah, it's not an easy time to get projects done, and I don't think it's going to get much easier anytime soon. But you alluded to the fact that we do have a significant drop in supply that we're starting to see. I think I saw at the end of last year, the third quarter of 2024 was the highest number of apartment deliveries in something like 25 or 30 years. But then the fourth quarter was the lowest number of construction starts in the last 25 or 30 years. So there was a data point like that out there. And I think that's descriptive of what's going on in the macroeconomic environment right now. So that's going to lead to a lack of supply. So our philosophy has been, you're not going to time the market. You're not going to time this out. And so we just decided to continue to stay active and to continue to build. We're a lot lower leverage than we used to be, which in some ways makes the investment a little safer for outside investors, because you're not overly burdened with a higher loan. And so in some ways it makes it better, and it crowds out people with less experience and people that don't have the capacity to raise money, and the people that don't have good relationships with lenders.
Yeah, for sure. So what does Brown Capital Group do differently than their competitors? Is there anything that you guys do in your projects that makes it more competitive, unique? What are you guys doing in your projects today to be competitive?
Yeah, so like I mentioned earlier, we try to adapt every project. It's a balance between, we've finally gotten ourselves to a point where we can rebuild buildings. We have prototype buildings that have been designed, have been built, and that cuts off on the design timeline. And so we can utilize that strategy and the strength of some certainty on construction and operations, because we've got something that's familiar. But then maybe focusing more on amenities, focusing on a more activated clubhouse, and spending more time and attention to those details that now that we have a prototype product, we can focus on other things, again, to just adapt, study the market, see what's working, and expand on that.
Awesome. And so I know that you were the chief development officer for your last firm that you were at. With all that experience, the time you spent in that role before founding your own company, what have you learned to do differently from the previous firm that you were at?
Yeah, so I learned a ton at my old firm, and I learned a lot about raising capital, speed to market, finding efficient products to build, good ways to manage projects, and really applied all those things that I learned there to Brown Capital, and really have nothing but good things to say about my old firm, and just kind of doing it in a slightly different structure. This was more about how I wanted to operate, and how I wanted to have a company that was focused exclusively on development. And so we can find the right general contracting partner, we can find the right property management firm, and I use my old firm for property management on some deals too. And for us, it was about adaptability, and I wanted to stay nimble, stay small, and and that's really what the objective was, and how we're structured, which is different from my prior firm. But
Okay.
obviously, there's a lot of sides to that equation. I've made the pitch of why it's good to be vertically integrated with construction and management, and that works sometimes too, and our structure works as well. So it's really, I think it's what the leadership wants to do, and in our case, this is how we want to be structured, and finding the right partners to do projects with.
Okay. And you mentioned that, it's a tough time to do projects in this market. You've been in the space for a long time. It was tough to do deals 10 years ago. It's tough to do deals now. I'm guessing in 10 years, it'll be tough to do deals in 10 years from now. What are you doing? Like, is there like any kind of secret sauce you can share that how you are staying active when there's a lot of developers on the sidelines or not being, not doing projects today?
Yeah, our focus is really on workforce housing. And so we're operating in a space that there is a lot of demand. And for every one project we do, we probably look at 50, right? Like there are a lot of opportunities that get put in front of us, and our team does a good job of analyzing a market, construction costs, and all those things. And we get to a point where we know what we can pay for land. In some cases that works. In some cases, we have to go to a municipality and say, if you want housing here, which a lot of these communities, especially the communities that have focused on job creation, they're the ones that have the biggest gap in housing. And so if you go to them and you say, okay, you need housing, here's our formula to get it done. Sometimes they get on board with that, and then you can get a project. And if they don't, it doesn't work, and we pass. But I think the one thing that we do a good job of in working with cities and towns is we basically go in open book. We show them our construction costs. We show them what the comps are. We say, hey, this is where we have to get, and in this case, here's how we get there, and we don't try to hide anything, and we view the partnership really with these cities and towns as important to us.
Great. And you mentioned workforce housing. Like, what does that entail? Like, for anybody that doesn't know, like,
Yeah. So 80, we like 80%, 80 to 100% AMI projects. That's that's 80 to 100% of the area median income. We like the Whites towns of the world, the Plainfields of the world, places that focus on job creation. Like I said, we've got a couple projects in Indy that are in areas with a high concentration of job growth. Fort Wayne, some of the areas that we focus on, we always say there has to be a large driver of job growth. And so whether that's the IU Health downtown, which we feel really good about and we're excited about projects down there, or everything that's going on in Whitestown, Plainfield, there's something like 35,000 people a day that commute to go to work there. So for us, there's got to be a driver of jobs in some form or fashion. And then and we study the lack of housing and choose to do projects in those areas.
Great. Yeah, makes sense. Jobs aren't going to come to an area. Businesses aren't going to come to an area unless there's, people living there that can work in their factories or locations.
Right.
It all starts with housing.
Yeah, exactly.
Great. Awesome. Well, yeah, our next section is going to be the real deal. I want you to, think about a favorite project or a deal you've done in the past. Love to hear like a behind the scenes look at how that project came to fruition.
Okay. So we have a project down at 22nd and Monon that was a really exciting one to work on, because you had an old obsolete building that was really an underutilized parcel. I mean, when you think about the Monon Trail, there's been so much development along it, and it's been so great for the city of Indianapolis, and it's really been a catalyst for a lot of great projects. And so we had a site with a building on it that I would say was underutilized. And again, we wanted to build this workforce housing product. So we worked with the city and came up with a structure where we received some incentive in exchange for restricting some of the units to 80% AMI. And that makes us feel good about, number one, it decreases our costs in terms of operating the property because of the incentive. Number two, we know there's a ton of demand for apartments at that income level. And number three, it's a blockbuster location. There's a ton going on 22nd. Again, I mentioned the hospital earlier. Everything along 22nd Street has really exploded in the last couple of years. And so that was a really unique structure and something that hadn't been done before, at least to our knowledge, in the structure that we created with the city, that is going to end in and result in a really cool project that was an otherwise underutilized area.
Okay. And what was like the unit count on that property?
That's 111 units.
Any commercial retail
No.
to it? Okay.
No.
Any idea, like off the top of your head, like do you know how many units were restricted to that AMI standard?
That's 51% of the units.
51. Okay.
Yep.
Okay. Wow. How did you come across the site?
I think the site was owned by a group that we had worked with on other projects before, a firm called INHP that really focuses on acquiring sites in targeted areas where they want to create housing. And so they do a really good job of buying land and trying to find the right project partner to help execute on the project. And we've worked with them on a few other projects before. And so this one kind of came together with them.
And so this is a project that's already been constructed, it's already leased up and operating now, or where are you guys at?
No, we just broke ground this winter.
Okay. So
Yeah.
what is like the timeline you're thinking for construction there?
Yeah, we think it'll take probably about 15 months to build and probably about a year to stabilize.
Okay. Awesome. Other than, the A+ location, the, demographics around the area, what else just about this deal that just made sense to you or got you excited about it?
Yeah, I think especially in areas that you're seeing a lot of new development and this is a pretty mature part of town. And to revitalize this little corner in an area where you're seeing a lot of new houses being built, a lot of houses being renovated. There's another project down the street that's under construction or just finishing construction. And so going into an area and continuing to help revitalize it, I think gets us really excited.
Okay, awesome. So our next section is going to be what we call off-market questions that are sort of like under the radar and don't always get answered in the space. I'd love to ask you a couple off-market questions. We'll just jump right in.
Of course.
So what are some important metrics that passive real estate investors can use to evaluate the strength of a development project? What would you tell them?
Of a development budget?
Project. Maybe looking to passively invest in a deal. They don't have a lot of experience in construction or cost. Like, what would you tell those investors to look at when they're evaluating a potential project to invest in?
Yeah, the first thing I always tell people, I end up in a lot of meetings with people that want to invest in real estate, whether they want to invest with us or not. And the first thing I always tell them to focus on is the principal and who's the firm you're working with. Like, do they have a track record? Will they tell you their lending relationships? Can you call and check on them? And making sure that you're investing with somebody that you, number one, trust, and number two, does what they say they're going to do. And so at the end of the day, as you know, like, you're putting your name out there to raise money, to build this project, stabilize it, and do all those things. And if somebody's going to invest in your project, like, they have to believe in who you are and what you're doing. And so if I was an independent investor looking at investing somewhere, I would make sure that, number one, the principal is accessible and they have some type of track record or background, and they're willing to share references.
Okay.
Like I said, whether that's a lender, other investors, or whatever that is.
Great. Any, since you're a numbers guy and financial guy, like, what metrics would come to your head that they might want to evaluate as well?
Yeah, a lot of people focus on IRR. That's, to me, less important because it's so, as that calculation is done, it's so heavily weighted on time that we focus a little more on multiple. And a lot of our investors, I get the question, if we're going to give you $1 million, how much am I getting back and when am I getting it back? And I think it's maybe oversimplified, but when we can say you're going to get $2 million back in 5 years, that's just more tangible than saying you got an 18% IRR, right?
Like, what does that mean? Is
Right.
that good? Is that bad?
Yeah, like and again, like I said, if you refinance early, then you've affected IRR just because it's a time value money calculation. So
Makes sense.
we focus more on multiple.
Awesome. Okay. What separates like the best in class developers from the worst, in your opinion?
Think about that. You know, the developers that we want to emulate are, number one, they're building products they've already built. That's the one thing I've learned is a lot of the really large developers that have grown fantastically over the last 10 years. They've found a product type that they like. It creates construction certainty. It creates operational certainty. You can take a building that you designed that works really well in Westfield, Indiana, and then you can go build it in Columbus, Ohio. You can build it in Atlanta, Georgia. You can build it wherever you want. So it's easier to take a product that you feel good about and build something you've already built in a new market. And that's something I've heard some developers talk about, that as I've been in this business for a handful of years now, I've seen that play out enough that I know that works really well. At the same time, those same groups know how to adapt a site that doesn't lend itself to that prototype product. And so I think it's really about the flexibility to build the right product in the right location. And, I think everybody who executes on a strategy, like whether that, like if you want to build high rises in Miami and New York, and that's your strategy and you stick to it, that makes a lot more sense to me than the developer that will kind of do a little bit of everything everywhere. If you're doing an industrial deal one day, a multifamily deal the next day, a retail deal the next day. To me, it would just be harder to grow if you tried to do everything. And there's plenty of firms that do it, and they must be a lot smarter than me, because I think we've been able to grow because we're really just focused on multifamily. And for the time being, that's really all we're going to do. And the groups that can build out a team in multiple disciplines, like that's really impressive to me. And there are groups that have been successful in that. But for us, like, we're going to stick to really one asset class and focus on that.
I agree with that. I mean, it's really, there's not enough time in the day to be an expert on storage, mobile home parks,
Right.
multifamily, office. Like, there's just, I think, so much more value into like focusing on one thing and becoming an expert on that one asset class versus having more of a scattered approach.
I do think that when you look at some of these groups, it's a lot easier to expand into other asset classes once you've become an expert in one.
Okay.
And so I think if you created a program for multifamily and then were able to execute on that strategy really well, it would be easier to bolt on whatever other asset class you choose, whether that's retail or industrial or whatever that might be. But I think you got to get one right first and then try to pivot from there.
Makes sense. So kind of like going off of that, like which business plan is more difficult? Is it multifamily development, or is it buying a existing asset? Like, which one is more difficult? Which one has more risk, in your opinion?
Yeah, I mean, I've heard this one both ways. Where I like ground up development more is because we built it, we know everything from the start to finish. Where some groups don't like acquisitions, it's because you don't really know what's behind the walls since you didn't build it. At the same time, you might be able to acquire stuff at a lower basis and renovate it for cheaper than what it would cost to build new there. So there's pros and cons of everything, and I think that, again, it's just about being disciplined. And there are some firms in Indy that are really good at acquisition and rehab, and they're going to continue to succeed. And there's some firms that are really good at development, and there's some that do both. I think it's so submarket specific.
That's true.
And like, some markets don't lend themselves to new construction right now. As you know, like, your construction costs are too high, so you can't build there for what the rent is. And so you're better off acquiring an existing 150 unit facility and spending $15,000 a unit to renovate it. And that's how you're going to create better housing. And so again, it goes back to adaptability. What's going on in that submarket? What's going on in that market? What are your costs? And I just think continuing to be creative on those fronts is where people are going to succeed.
Yeah, great point. So like what's like the biggest risk that you see in multifamily development in your opinion? Is it unexpected costs? Is it the timeline, lease up? Like what part of development is the biggest risk in your eyes?
I think the biggest focus needs to be underwriting a submarket. I don't think you can time. We've heard a lot of noise about tariffs and things like that. We haven't really seen any of that materialize. We've heard noise about labor costs going up. We haven't seen that materialize. So I think if you sit on the sideline, you're not going to time it out right. I think the people that I've observed who have been successful have just continued to build through uncertainty in the economic environment, and they have their projects, they believe in them, and they keep going. I don't think sitting on the sideline really does a lot for you. And I think the key is understanding all the inputs. Where we have an advantage right now versus when I started the company is we've got a handful of projects under construction. So we've got real-time data on what everything costs. And so if we're looking at another site down the road, well, we know what our inputs are going to be on the cost side. And so that's where we feel really good about our pipeline is we've got enough going and projects that are starting, projects that are in the middle of construction, projects that are wrapping up, and we're seeing that. So the real work needs to be understanding the submarket, understanding what's going on from a rent perspective, and again, our focus is always job growth. Like, is there a job growth story? Because that's going to bring people to your submarket.
Why are you still bullish on multifamily housing or multifamily development now when you're hearing stuff about uncertainty in the market or tariffs or increased construction costs? What makes you still bullish to stay active and take those risks to provide housing?
Yeah, we follow job growth and population growth trends, and so you're not going to go build, or we're not going to go build in an area with negative population growth. We're not going to. We always focus on areas where there's jobs being created and there's people moving. And if you ignored those trends, then you're going to have unsuccessful projects, right? You can't, again, you can't beat the market. And so if you think you're going to go build a 500 unit deal in a place with negative 4% population growth, good luck. But that's not something we would do. So we try to stay disciplined on really just the fundamentals. And so we pay attention to all the trends. We pay attention to jobs. And again, we have a kind of prototype size deal and a prototype market that we like, and it's got to be all those things for us, whether it's Indy or Cincinnati or Columbus, Ohio. It's got to check all those boxes for us to transact.
Yeah. And I guess like when you see those job growth numbers and population growth numbers, I mean the data is there. Like those people need a place to live, and in my opinion, like people are going to need a place to live, like in any market cycle, in any economy, no matter what's happening, like need a place to live. And especially like when we're seeing like the cost of houses increase, mortgage rates staying around 7%, there's going to be certain people that don't want to buy a house, maybe they can't afford a house, and they're going to need these, multifamily units to live in.
Yeah, there's articles written every day about the macroeconomic environment of how unaffordable it is to buy a home. Mortgage rates are up, all those things, and that applies everywhere. So
Makes sense.
that I think is having a large impact on the demand for multifamily housing, and it doesn't seem like that's going away anytime soon. But I think that affects really every market, and that's where as long as those factors stay where they are, that's where I think the work to be done is on analyzing the submarket and understanding what's going on in that particular location.
Agree. And last question here for this section, is your company vertically integrated?
No, we're just development.
Why have you chosen to, I guess, not go vertically integrated? Like, what's your opinion on that?
Yeah, so my opinion on that, and again, I think leadership in any firm can decide to do this however they want. My opinion is I'm not an expert in property management. I don't have a background in it, and I'm not an expert in construction. I don't have a background in it. So I'm not so arrogant to think that I could build out those verticals. We focus on the development aspect because that's where we think we can add the most value. And so we can partner with really good general contracting firms. We can partner with really good property management firms. We bring them all in the process very early. So when we're underwriting a project, we're working with usually a couple property management firms to get feedback so that we understand, okay, is our operating budget sound? Is it reasonable? And, if something doesn't seem to check out right with a couple different firms, then we make a change. And so we, again, with construction, as soon as we underwrite a project, we pass the budget along to a general contractor or two and say, here's the product type, here's what we think we can build it for, like give us some input. And so there's a little back and forth on the general contracting side as well. And so we're fortunate that we have really good groups that we've worked with on both sides of that, on both parts of the business there. But for us and for how I want to grow this firm, we will stick to being exclusively focused on development.
Oh, awesome. Thanks for your take on that. Awesome. Okay. In our last section, sort of like our wrap up area, we're going to talk about your story, your vision, and like what's next for Brown Capital Group. I guess like to start off, you come from a successful career as a real estate attorney. You then pivoted to be a, chief development officer for your last development firm. What made you like want to take on more work and, risk at the same time to go out and start your own company when it looks like you had a pretty good, career before this? Like what made you want to take that leap?
Yeah. So I grew up in a small town, Logansport, Indiana. My dad and his family had a little general contracting firm. And, I think growing up in a small business environment, I kind of always had that ingrained in me that was something I was probably always going to do in some form or fashion. I got into law because I did enjoy the intellectual gratification of practicing law. I really, you're problem solving all day, and I had a lot of fun. I had great partners, I had great clients, and I learned so much in the basically 10 years that I practiced law. That, over the course of time, I just kind of started to want a little more. I wanted some of it was freedom. When I was in the law firm, I was tied to my desk all day and missing kids' games and stuff like that, which didn't appeal to me. But then I think it was a combination of, I've got all these clients that do this. I felt like I understood the business. I had the desire to be entrepreneurial, and over the course of time, that all just kind of came together, and I decided to leave the firm. And so then did a handful of projects in a couple different partnerships for a few years. Ended up at my last firm, had just known those guys for years and respected them. And that was a great training ground for me to see a company that had really grown. I wasn't there at the start of it, but I was there through a significant amount of the growth phase of that firm. And so really a lot of lessons learned on, managing capital relationships, managing growth, managing teams, and was there 5 years and at that point decided it was time to do it on my own. And like I said about how I've structured this firm, that was really just from lessons learned from everything else I've done.
That's awesome. I always admire, people kind of like taking like the leap of faith to go start their own thing, whether that's a, company or side hustle, but just taking on when it's going to be more work, more risk, but you're willing to, put in that work to achieve like that greater outcome or your long-term goal. So I always admired that about people.
Yeah. There are sleepless nights for sure. And I think any entrepreneurial person will tell you that. But it's rewarding. Being able to, the team that we've been able to build and the buy-in from the younger folks, it's a lot of fun going into the office every day, and it's a lot of fun to work with. We've got great partners, we've got great investors, and to be able to, build all that and take the risk, it's, like I said, it's gratifying.
Great. So what's next for Brown Capital Group? It sounds like we already touched on this, like you're gonna be, laser focused on development and what you guys are doing now, but is there anything, exciting in the works or something you can share that's up and coming for Brown Capital Group?
Yeah, we've got a couple more projects. I think we'll get one tax credit project done this year and one market rate project done this year. Next year should be about the same. We're good for 2 to 3 projects a year. What I'm most excited about is replicating what we've done and taking the parts of projects that we really like. For example, we've got a really good 3-story walk-up building, making tweaks to that to make it better, making the amenities better and taking that to a different site. And I think that's the next catalyst for our growth is being able to replicate things we've already done, make them better, make changes along the way, and just continually build a better product.
Great. How do you spend most of your day as the CEO of your company? What does your typical day look like?
Yeah, so my day is really focused on two things. Number one, the pipeline, and number two, capital. Anything other than those two things, I try to build a team to handle. And so on day one, when it was just me, I had to do everything. And then I've got some really good mentors that I bounce ideas off of, and guys that have grown firms and grown businesses, and in some cases sold them. And that's, as those conversations have occurred over the years, it's really, you got to focus on what makes Brown Capital grow. And that's those two things, is building the pipeline, finding the projects that meet our criteria and are focused on, like I said, workforce housing, the areas that we want to build. And then the most important thing to get those done is capital. And so managing relationships with lenders, managing relationships with investors, and really that's where my main focus is.
Makes sense. Yeah, I mean, I guess you don't have much of a business if you don't have a pipeline and then people to fund.
Right.
Pipeline, so
it's all about, I mean, real estate's capital intensive. Everybody will tell you that. And it's all about arranging for that and making sure that you can actually execute.
Awesome. Well, really appreciate you coming on the show. I enjoyed all of our conversation and everything. Where can people go to learn more about you, follow your company, or where can any investors go to learn more about your projects?
Yeah, we've got a presence on LinkedIn. We're pretty easy to find there. Our website's Brown Capital. That's CAPITALGRP.com. If you want to email, you can email us through the website, or it's just investors@browncapitalgrp.com, or you can stop in our office in Broad Ripple. We're in an old library in Broad Ripple. Part of the building's co-working space, so we've got some people in there, and we're kind of in the back of the building, and usually there's somebody there.
Awesome.
Right now I've got a puppy there too. So.
Oh, great. Well, I'll drop all those links in the show notes so everybody can find them.
Okay.
But yeah, thanks for coming on, Jarod.
Thank you. Appreciate it.